In the volatility of the past few years, event-driven distressed hedge fund Litespeed Management has thrived. The fund has $1 billion under management, and yesterday I sat down with the founder and CEO of Litespeed, Jamie Zimmerman. I asked her where she's finding opportunities.
We like to think of ourselves as an event fund who is an all-weather fund, because we really do balance sheet events, whatever is coming, being thrown at us at the moment. So, right now we're looking at a lot of M&A, we're looking at a lot of spin-offs because the cheap financing environment is providing those opportunities. In a couple of years, most likely when the cycle turns, we'll provide restructuring opportunities.
I want to ask you what the low interest rate environment is doing right now, because if you're looking to companies that may have a stressed out balance sheet, the fact that money is more available may decrease opportunity for you, or is that a false assumption?
What's most extraordinary, I think, about this time is how fast the financing market came back. It came back much faster than the economy, and that is extraordinary.
It is extraordinary, and
now,
it's also,
in large part thanks to the government, who has been really pushing people into riskier assets and setting up potentially, another bubble. This whole market is predicated on low interest rates. The ability to, continue carrying a big bank debt balance, which is paying LIBOR plus 150. It makes it much easier for companies now to restructuring. There are a couple of companies like Clear Channel or, Rite Aid has a very heavy debt load, TXU, which are benefiting dramatically from very low LIBOR. And when the interest rates go up, everything, cap rates will go up, real estate will go down, the ability to, refinance mortgages. So I think the whole system is really predicated on low interest rates now.
So as a distressed debt expert, are you surprised with just how freely money seems to be flowing these days?
Money is incredibly freely flowing. KKR just financed their Del Monte deal at 5.5%. That is the cheapest debt they have ever gotten on any LBO in their history. Although the spreads aren't as tight as they were in 07, the underlying interest rates are lower, so the absolute return people are seeking for high yield is historically at a low. It's actually on average 6.7% now. And what is most extraordinary, which really I think sets up distressed investors for another wave of opportunities maybe 2 years out, is how much CCC paper is being issued. So last year you had a $317 billion of high yield issued. That is an all-time high. And about $37 billion of it was CCC, which is most interesting because S&P defines that as having a 50-50 chance of default.
So it sounds like there's a storm that's brewing, and you say 2 years down the line there could be actually an event.
Absolutely.
Another black tail?
Well, if confidence wanes, if the economy stops growing. I mean, in the interim, there are tremendous opportunities in M&A. We have a position in Tenant, which I think is going to get taken out way higher than where it's trading. There's a hostile bid from Community Health, but HCA is going public at an incredible price. I mean, it's really unbelievable how much money people made LBOing HCA in the 5 years that they've taken it private. And a year ago, you couldn't have dreamed of taking the thing public. And now, you can take companies public. You could get financing at 5.5%. People are even doing dividend deals. So last month, you had 5% of all high yield issuance was for dividend deals, something which was unthinkable.
I was just going to say, so is this proof that people have absolutely no long-term memory, no even short-term memory?
Long-term memory. I mean, I think the cycle switches from total risk aversion to total greed.
So essentially, fifth gear or off. That was Jamie Zimmerman. She is the founder and CEO of Litespeed.